Hey, I'm Stefan, and today we're going to talk about something that's been on my mind recently, PacWest Bancorp. In this video, we'll dive into the financial performance of this bank holding company and explore their prospects for the future. But before we get started, make sure to hit that like button, subscribe to my channel, and turn on notifications so you don't miss any of my latest videos. PacWest Bancorp is based in Beverly Hills, California, and operates through its subsidiary, Pacific Western Bank, which has over 70 branches across California, Arizona, Nevada, and Washington. Like many other banks, PacWest Bancorp has been hit hard by the pandemic and recent banking crisis in 2023. As you may know, this crisis started when three small to mid-sized U.S. banks failed in March 2023, triggering a global panic and a massive intervention by central banks and regulators. However, the bank has been facing some challenges in the wake of the banking crisis. First of all, the bank has a significant exposure to commercial real estate loans, which accounts for 55% of its total loan portfolio. These loans are vulnerable to defaults and losses if the real estate market declines or the borrowers face financial difficulties. In their latest financial report, PacWest Bancorp reported revenue of $1.34 billion for 2022, which represents an 8.13% decrease compared to the previous year. Now that's a mouthful. Their earnings were $404.27 million, a decrease of 33.39% from 2021. These numbers might be concerning, but it's important to dive deeper into the underlying factors that have contributed to this decline. One of the main reasons for PacWest Bancorp poor financial performance is the deterioration of their loan portfolio quality. This has led to a decrease in net interest income, which was $1.3 billion in 2022, down 16.6% from 2021, and a decline from their net interest margin, which was 3.38% in 2022, down from 4.66% in 2021. Additionally, PacWest Bancorp had to set aside $24.5 million as a provision for loan losses in 2022, up from $9 million in 2021. So what's PacWest Bancorp doing to address these challenges? They're taking strategic actions to improve their capital and liquidity positions and reduce their risk exposure. For example, they have sold $1 billion of available for sale securities to pay down their Federal Home Loan Bank borrowings and increase their cash reserves. Now time for our sponsors. Hey there, website warriors. Are you tired of your website feeling like a deserted island? Let us help you turn it into a bustling metropolis. I'm the founder and CEO of Lotus Capital Hub, and I'm here to tell you about our website marketing services that will have your website attracting more visitors than a free pizza party. In a world where everyone is competing for online attention, you need to make sure your website is standing out like a hot dog stand in a vegan festival. Our team of SEO ninjas, paid ad gurus, and display advertising wizards will help you achieve just that. We're like the Avengers, but for your website. So what's the holdup? Head over to lotuscapitalhub.com and let us help you take your website from zero to hero. We're dedicated to providing solutions that will make your website the talk of the town. Trust us, with our website marketing services, your website will be more popular than a meme of a cat playing a piano. They have also reduced their exposure to commercial real estate loans and increased their focus on commercial and industrial loans. However, despite these efforts, PacWest Bancorp's stock price has taken a hit. Since February 24th, 2023, their stock price has fallen by over 78% from $28.31 per share to $6.10 or 10 cents, per share as of May 8th, 2023. This reflects the market's concerns about the bank's financial performance and outlook. Secondly, the bank has been experiencing a decline in its net interest margin, which is the difference between the interest income it earns from loans and investments and the interest expense it pays on deposits and borrowings. The net interest margin is a key measure of bank's profitability and efficiency. In 2022, PacWest Bancorp's net interest margin was 3.64%, down from 4.01% in 2021 and 4.42% in 2022. This decline was mainly due to the low interest rate environment and the increased competition from deposits. Thirdly, the bank has been facing some regulatory scrutiny and litigation risks. In February 2023, the bank disclosed that it had received a subpoena from the U.S. Department of Justice, DOJ, regarding its compliance with the Bank Secrecy Act, BSA, and anti-money laundering AML regulation. The bank said it was cooperating with the DOJ and that it could not predict the outcome or impact of the investigation. In addition, the bank has been involved in several lawsuits relating to its lending practices, consumer protection laws, and employment matters. So what does this mean for PacWest Bancorp's future? What are some positive signs that the bank is trying to overcome its difficulties and improve its performance? For instance, the bank has been diversifying its loan portfolio by increasing its exposure to other sectors such as healthcare, technology, and energy. The bank has also been reducing its cost of deposits by offering more digital products and services to its customers. Moreover, the bank has been maintaining a strong capital position and liquidity level, which enables it to withstand potential shocks and losses. However, there are some uncertainties and risks that could affect PacWest Bancorp's outlook. For example, the bank could face more regulatory actions or fines related to its BSA AML compliance or other matters. The bank could also suffer more loan losses or impairments if the economic recovery stalls or other factors. Furthermore, the bank could face more competition and consolidation pressure from other regional or national banks that are looking to expand their presence or market share in California and Nevada. So can PacWest Bancorp go bankrupt? Well, it's possible. One scenario is that it faces a wave of loan defaults from its borrowers, especially those in sectors that are most affected by the pandemic, such as hospitality, retail, entertainment, and healthcare. If PacWest Bancorp cannot recover its loan or sell them at a fair value, it may have to write off a large amount of bad debt and reduce its capital ratio. This could trigger a downgrade of its credit rating and increase its cost of funding. If PacWest Bancorp cannot raise enough capital or liquidity to meet its obligations, it may face insolvency or regulatory intervention. But let's not focus on the negative. How can PacWest Bancorp avoid bankruptcy? One possible strategy is to diversify its loan portfolio and reduce its concentration risk in certain industries or geographies. Another possible strategy is to improve its efficiency and profitability by cutting costs, optimizing processes, and enhancing customer service. A third possible strategy is to pursue growth opportunities by expanding to new markets or segments, acquiring other banks or financial institutions, or partnering with fintech companies. Thanks for watching this video on PacWest Bancorp. I hope you found it informative and insightful. If you enjoy the content, please consider giving a thumbs up, subscribing to my channel, and turning on notifications so you don't miss out on any future videos. So let me know your thoughts in the comment section below. What do you think about PacWest Bancorp's prospects? Do you agree with the strategies they're implementing? I'd love to hear your opinions and start a conversation with you. If you're interested in learning more about the financial world, be sure to check out my other videos on my channel. Thanks again for watching, and I'll catch you in the next one.